Well, greetings, friend. I hope you are well today. I'm John Rurkowski. I help families transition to the next chapter in their life regarding real estate and anything else I can actually help you with. And one of the biggest misconceptions I hear is, John, I don't have 20% down to buy a home. So today we're going to go over, depending on the type of loan you get, how much is going to be required to be put down. And a lot of it has to do with you and your credit worthiness, your job history, etc. A lot of factors go into a down payment. So I've got my trusty notes here so I don't miss anything for you. Got to put the readers on, as you get my age, and my experience, I got to use the reader. So we're going to talk today about how much you need to put down on the purchase of a property. Now, obviously, the more you put down, the less your mortgage is, okay? The less your mortgage is, the less your monthly payment is. But depending on your financial situation, you may not want to put 10, 20, 30, 40% down. You'd rather keep it in a savings or a retirement type account that's earning you more interest than you'd be paying on your mortgage. That's something to discuss with your loan officer and your financial planner as well. So let's explain the different options when it comes to down payment and the types of loans. So conventional loans, they can be as low as 3%. A conventional loan isn't necessarily going to be 5, 10, or 20% down. Depending on your credit worthiness, if you're a very strong buyer, meaning your credit is outstanding, you can get a mortgage for as little as 3% down. Quite amazing. FHA loans, like we discussed in a previous video, is 3.5% down. And VA loans for my veteran buyers out there, thank you for your service. I've used my VA loan numerous times and got into my home with 0 down, okay? There's a cost to 0 down. Nothing's free, okay? But if you don't have the money to get into a property, but can make the mortgage payment and can, purchase the insurance and taxes, etc., you can get into a home, if you're a veteran, we're using a VA loan with 0 money down, okay? I'm working with a young buyer right now where we put on the escrow deposit, which we'll talk about next. We put down $3,000 as the escrow deposit, which he's going to get back at closing because, again, being a veteran, he doesn't have to put anything down. So his mortgage is 100%. Well, since he put $3,000 down, the mortgage is actually covering more than just that 100%. He's getting that money back. There are also some special programs out there for down payment assistance and things like that, which any good lender can speak to you about. So the point on option number 1 here regarding down payments, the right loan depends on your financial situation, not just the smallest down payment. Okay. Again, speak to a great loan officer. I've got a few that you can chat with, and they can really help you, guide you, right, to the right course of action on which loan and how much to put down. Let's talk about earnest money next. What is earnest money? Earnest money, it basically shows the sellers you're serious. Would you put something on hold for somebody if they want to buy it if they're not putting any money down? Of course not. We want to make sure that when we represent a seller, that the buyer is serious. He's a qualified buyer. He's got a pre-qualification letter from a lender. He's putting money down as a good faith deposit. Okay. And that deposit obviously is going to be based on what you're comfortable with. What normally I would suggest is, depending on the price point, 1 to 2% of the purchase price. Okay. $400,000 home, $5,000 to $10,000. Okay. If you don't have that, then you really I would have to question, can you afford the home? Okay. This isn't, I'm not judging, but just think about from the seller's perspective. You're buying a $400,000 home, you should have at least 1 to 2% down as a deposit, okay, on buying this home. Let's discuss exactly what escrow is. It becomes part of your down payment. It's held in escrow at a title company or law firm, depending on who's doing the closing. Sometimes, occasionally, a real estate brokerage will hold it. But for the most part, it's usually a title company or a law firm. So you're putting that $2,000, $3,000, $5,000 down as a deposit. That's $2,000, $3,000, or $5,000 less that you're going to be bringing to the table based on the loan that you're getting. Okay, so it's basically added to the additional amount you're bringing to the table to to bring it up to that number that meets your mortgage requirement. It becomes part of your down payment or closing costs. Okay, the amount varies by market and price range, and like I said, I think 1% to 2% is a fair number. Sometimes the higher end homes, the $1 million homes, that there might be more of a deposit required on a buyer of a multi-million dollar home. Home inspections, guys and gals, they are a must, even in new construction. Yes, it's a cost to buying a home, but if you don't do it, it's just a foolish mistake. For $400 to $700, depending on the size of the property, it's an insurance plan. Okay? And with the contracts we write up, that inspection is then going to be used as ammunition for you to either ask for repairs, ask for a credit, or cancel the contract. And don't you want to know what you're getting into when you're making one of the biggest financial investments of your life? Of course you are. I'm going to insist it. And if you don't want to do a home inspection, I'm going to ask you to sign a waiver saying, I don't want a home inspection. All right, please. We're going to get a home inspection. And depending on where you live and what kind of property or loan you're getting, you're also going to get a WDO, wood destroying organism inspection. Other more commonly known here in Florida as a termite inspection. Okay? The WDO is wood destroying organisms. It's not just termites, it's other things that destroy wood. Could be mildew, could be mold, whatever it might be, different bugs, whatever, ants. That's what that inspection is for, letting you know that your home is free and clear of WDO. And who else needs a clean WDO? Your insurance company, okay? Especially if you're going VA or FHA. They want to make sure that they are loaning money to you on a home that is free and clear of anything WDO. Another cost that you need to realize as a buyer getting a loan is an appraisal. The lender is going to put into the pool this property, and an appraiser will be randomly selected. So it's an arm's length transaction. The lender isn't, in bed with the appraiser, making sure it appraises. And they want to make sure that the value is there to protect the lender, making sure that the value is there for them to give the loan. And that's why a third-party, unbiased appraiser is being used. Like I mentioned in my notes here, the lender wants to make sure that the home is worth what you're paying for, right? They're protecting you. Closing costs. Closing costs, if you're paying cash, which I know that's not the topic today, but for those listening, if you're paying cash, your closing costs are minimal. If they're $1,000 total all in, that would be a lot if you're paying cash. If you're getting a loan, depending on the type of loan you're getting, a ballpark figure, 2 to 5% of the purchase price, depending, okay? And in some cases, we can ask the seller to pay your closing costs. This young VA buyer I'm working with right now, we've got all of his closing costs being paid by the seller. And there's different ways we can word this in a contract. And what a seller cares about is their net. So if you're offering full price, asking for closing costs, and their net is what they want, it's almost the same as asking, or offering less money with no closing costs. Sellers care about one thing, net. Buyers care about one thing, basically. What's my principal, interest, taxes, and insurance? Some closing costs, when you're getting a mortgage, are mostly mortgage related, okay? Most of your closing cost fees are directly from your lender. So when you first meet with your loan officer, he can go over some basics on what your approximate costs are going to be. You need to know that. And that's why when he sits down with you and they talk about the finances of getting a mortgage, you've got to have the ability to pay that. Okay. Do you have the money in the bank to pay those closing costs? Okay. On a $400,000 home, it could range from $8 to $12 to $15,000, depending on the loan and other factors that go into that. Some people forget about moving expenses and the cost of moving. It's a cost you've got to factor in. And how about the repairs or things you want to do in the property prior to you moving in? That's an additional cost that we got to keep in the back of your mind here when it comes to the process of buying a home. An emergency fund. Don't you wish we all had a little bit bigger emergency fund for those so-called emergencies? And I would always encourage any of my customers to not be mortgage poor. If your lender says, John, Joe, Sally, you're qualified up to $500,000 for a home. Okay. What we have to take into consideration is what's your principal and interest, and how about taxes and insurance on that property? And just because you can afford a $500,000 home on paper, you never want to be in a position to be mortgage poor. So we will have that conversation between you, me, and the loan officer, making sure we're setting you up for success, not failure. We don't want you to be scrambling every month to make the mortgage payment. That is not what we want to do. We want to find the right property, making sure it's free and clear of any major defects and WDO and all those things that go into the process. And that's what we are here for. I've helped families transition for over 25 years now. I'd love to help you in any way I can. And by the way, if you'd like a home buyer kit, which basically helps you think about things you may not have thought about, reach out to me. Call me, text me, message me here on YouTube, and I'd be glad to send over that PDF for your review. I'm always here for you. If there's a topic that you would like me to discuss on this channel or with you in person, ask. I'm sure if you're asking it, other people are asking it as well. I'm here for you. I'm John Rurkowski, helping one family at a time transition to the next chapter. I'd love to help you. Call me anytime at 727-459-7356. Make it a great day. Peace.